Hi class, today we're going to be looking at chapter 4. We're going to be learning how to calculate federal income tax, and we're going to work on problem 4.1b and 4.2b. I'm sharing my screen with you now in Cengage. We're going to be Justin Matthews, a waiter at the Dixie Hotel. In his first weekly pay in March, he earned $360 for 40 hours that he worked. In addition, he reports his tips for February to his employer at $700, and the employer withholds the appropriate taxes for the tips from his first pay in March. So something that I want to point out to you is you need to, first of all, before you start to calculate federal tax, know that we're looking at a weekly pay period because the tables are set up weekly, bi-weekly, monthly, semi-monthly. Those are the pay periods that the tables are set up for. So it's important for you to pick out important information that was given to you before you decide to calculate the federal income taxes. We need to know that this was a weekly pay. So what I would tell you is that you should probably write down that this person is paid weekly, because that's important information. Also, we want to calculate, when we're calculating the federal income tax, the total amount of earnings that would be subject to taxes. Your regular earnings are subject to tax, which were $360 in this problem, and your tips are also going to be subject to tax. So when we get ready to calculate the federal income tax, we're going to be combining both of these amounts to find the total amount of wages that that employee was paid for. All of those are going to be taxable. So we're going to add the two of these together to get our federal income tax amounts. Another thing that you have to take into consideration is what table that the federal tax will be calculated on. In this case, the federal income tax is calculated using the wage bracket method. There's another method called the percentage method that is sometimes used, but in this problem, we're using only the wage bracket method. So that's something important, and that's something that I would write down, that we're using the wage bracket method. We also need to take in consideration the employee's marital status. In this case, the employee was married filing jointly. There can be married filing jointly. It could have been head of household. It could have been single. So there's different filing statuses. You have to pay particular attention to that employee's filing status. And this person is married filing jointly. And so I would suggest that you write that down too. We're going to be calculating the federal income tax based on the wage bracket method, and the person is married filing jointly, and he gets a weekly pay. That's the weekly pay period for that employee. Now take into consideration what they've got in bold here, because this is very important. When you enter your deductions, you're going to always put a minus sign in front of them. If you do not put a minus sign in front of these deductions, it will count it wrong. And then you'll be trying to figure out why in the world Cengage has counted your stuff wrong. You have to put a minus sign in for the deductions. So that's very important to know on this problem. You're also going to round interim amounts to 2 decimal places, And you're going to use these values in subsequent computations, and then you're going to round your final answer to 2 decimal places. Another thing that's very important, notice they have it in bold here because they really want you to read this. As they go to press, the federal income tax rates for 2021 are being determined by the budget talks in Washington. They're not available for publication yet. So in this chapter, we're going to be using the 2020 federal income tax tables for manual systems with forms W-4 from 2020 or later. We're going to use the standard withholding. That's very important when you are choosing your tables to get the correct amount that they want you to put in for your federal income tax. Notice right here, there's a link to where you're going to click on this link to where you can access your tables that you will use with these problems. The first thing that they wanted you to answer is the gross pay. So what we're going to do is just pick up the total earnings that your company paid him. Your company pays $360. Now, it is true that this employee got tips, but they got tips from someone else. So for their gross pay, we just need to enter in $360, which was his earned wages for this particular week. It might be a good idea to check your work as you go through. So check your work. Your federal income tax is going to be calculated next. That's what we're learning in this chapter. So in order to calculate the federal income tax, you need to know that this person is paid weekly, that we're using the wage bracket tables, and that this person is married filing jointly. We also need to know the total amount of wages plus the tips that are subject to the federal income tax. You're going to add 360 plus 700 together to get the total amount of 1,060, and we're going to calculate the federal income tax on this 1,060. So I'm going to click here to show you how you get to the wage bracket method. So when you click on that link, it's going to take you here, and this gives you an outline of where the tables are in your textbook. So if you have a hard copy of the textbook, they're found at the end of the textbook. Right at the very end, they've got a hard copy of these for you to look at. Since I don't have a hard copy to show you right here, I'm going to show you how you can find them right here online. So first of all, tax table A has to do with the percentage method. We are not using the percentage method in this first problem. They told us that we were using the wage bracket method. So we got to scroll until you find the wage bracket method. And the wage bracket method is tax table B. The next thing you need to do is when you're looking at the wage bracket method is determine how the employee was paid. You'll remember we said that that employee was paid weekly. That's the first thing you need to look for on the wage bracket method, how the employee was paid. If the employee was paid bi-weekly, we keep scrolling down and you'll see there's a new table that starts right here that says bi-weekly. Or if the employee was paid semi-monthly, this is the table that we would use for semi-monthly pay periods. Or if the employee was paid monthly, this is the table that we would use monthly. In this problem, the employee was paid weekly. So I'm going to go back to the weekly tables here. And the first table is right here for weekly. Notice there are 2 pages of weekly tables. And the reason for that is you've got to determine how much of the total wages are taxable for federal income tax purposes. And the way we do that is we look at these tables, we're going to look at least, but not over. Now, I know you probably can't see the numbers very well here. I can't see them. So if you want to enlarge this table, this is how you do it. You see the plus sign right here. If you'll click on that, that table will enlarge. So you can see here that you're using the wage bracket method, that these are the wages. And you'll remember in this problem, when we added our wages and our tips together, it gave us 1,060. So this column just goes to $750 or $760 in total wages. We can't use this. We need to get closer to our total earnings that are going to be taxable for federal income taxes, which the amount was 1,060. Again, this was what you earned plus your tips. So I'm going to scroll over. And I'm going to find on my weekly table the amount of my wages between or up to 1,060. So I'm going to scroll all the way down. And you see here, they've got 1,060 right here, at least, but not more than 1,060. But for this textbook, they always go to 1,060 to 1,070 because the higher amount of the bracket will give you a higher amount of taxes. So we want to make sure that our employee has the proper amount. So we're going to go to, let me back up for just a minute, because our total wages were 1,060. From 1,060 to 1,070, you're going to scroll across this table. Now, make sure on the table that you're under the category that says married filing jointly, because this person was married filing jointly, and also because the problem told us that there was standard withholding. Then you're going to be married filing jointly, standard withholding. You're going to come down here to the amount from 1,060 to 1,070. You're going to go across to where it says $63. This is the tax amount for married filing jointly with a weekly paycheck for a pay in the amount of 1,060 to 1,070. This is the federal tax amount that you're going to pick up. It's $63. I'm going to go back to Cengage. I'm going to enter my federal tax. This is a deduction, so I have to enter it as a minus. We're going to be subtracting the deductions from the total amount of our pay. So I'm going to put in minus 63, which is our federal income tax. And I'm just going to check my work just to make sure that I picked up the correct amount off of the tables. We only use these tables for the federal income tax purposes. Remember, we use the wage bracket method, and they told us that we were using the standard withholding for forms W-4 for 2020, and we're using the wage bracket method. Wage bracket method, the standard form for 2020 with the standard withholding. So that's how I got the federal income tax amount. To calculate the Social Security taxes, the OASDI, you'll remember that was our Social Security tax, or it was a part of OASDI, and we learned how to do this in Chapter 3. So what we're going to do is we're going to take the total amount that would be taxable for Social Security taxes, which includes both the earned amount of $360 plus the $700 in tips that this employee earned. The total was $1,060. So the total wages of $1,060 are going to be multiplied by 0.062%, just like you did in the last chapter. And you're going to enter them in as a deduction. You have to put a minus sign in front of it, or Cengage will mark it wrong. We don't want that to happen to you. And the amount is $65.72. Again, I added $360 and $700 together to get $1,060. Then I multiply it by the OASDI rate, which was 6.2%, and it will give me $65.72, which is going to be a deduction. So that's why I have to enter it in as a negative amount. For your Social Security taxes, HI portion, you do it basically the same way. You take the $360, add the $700 to it to get $1,060. Then we're going to multiply that by 0.0145, just like you did in the last chapter, and that will give you a deduction of $15.37. You have to put the minus sign in there for this to give you the correct amount. Now, we haven't talked about state taxes, but in your problem, they tell you that the state tax rate is 2%. Again, we're going to add $360 and $700 together to get total wages of $1,060, and then we're going to multiply that by 2% as the state income tax percentage that they're going to give you. The deduction amounts to $21.20. Again, I'm going to check my work, and then I'm going to find the net pay. To find the net pay, you take the gross pay and subtract each one of these deductions from it to get the net amount that is going to be paid to this employee. So 360 minus 63 for federal income taxes, minus 65.72 for your OASDI, minus $15.37. And then you're going to back out again your state income tax of $21.20. And that leaves you with a total amount that you're going to pay this employee of $194.71. Let's see if I got my math right. I did. So that's all you have to do with this particular problem. Now I'm going to move to the second problem, and we're going to go through this problem. Notice on this problem, it's telling you that you're going to use the percentage method this time, not the wage bracket method. You're going to use the percentage method to calculate your federal income tax that will be withheld from the wages. And in this problem, we're just going to put down the amount that's withheld, but we're not going to have to put in a minus sign in front of it. We're just going to calculate the amount that would be withheld using the percentage method. Again, it's very important that you read this information in bold. Again, we're using the tax tables for 2020. We're going to use it with the standard withholding. And this is the percentage method this time. To access the table, I would click on this link. It's going to bring you to the link that we were at before. And just like before, we need to, I would suggest you write down some things. So I'm going to look at employee number 1 first. The employee's name is Fox. The filing status is married filing jointly. That's what MFJ means. So write that down. He's married filing jointly. That's important for your table. You need to know that. You also need to know when he's paid. He's going to be paid weekly. So I would write that down. It's going to be weekly for this person. The amount of his wages, I would write that down too. It is $15.75. And we're going to use the percentage table, the standard withholding. So I'm going to go back to my table. You just click right here. I'm going to go back to my table. I'm going to, let's see here. I need to move my stuff around a little bit so I can see what we're doing. I'm going to close out that one I had up before. We're not going to use tax table A, but we're going to be using tax table B. So with tax, I said that wrong. We're not going to be using tax table B. We are going to be using tax table A because tax table A is the percentage method. Now, remember, the reason I told you to write down the information on that particular employee is because you need to know whether they're weekly or whether they're bi-weekly or semi-monthly or monthly. You'll remember that on our first employee, we were going to pay that employee weekly. Now, the next thing you need to look for is the marital status. Remember, on this employee, we wrote down that that employee was married filing jointly. So we're going to use the standard withholding rate schedule, which is this one. We're going to look to see if we are being paid an amount that falls in between these two items. Again, I'm having trouble seeing this, so I'm going to enlarge it. That little plus sign will make it bigger so we can see more about what we're doing here. And we're married filing jointly. This employee earned $1,575. That falls in between these two amounts. It's got to be at least the amount that he's earning is $1,575. The at least portion is $857 up to 2020. Do you see? This is what our salary falls in between. And the way you do this calculation is you take the amount of your salary and you subtract $857 from that. So I'm going to subtract $857 from my salary amount. The salary amount was $1,575 minus $857. The difference is $718. We're going to multiply that by the percentage, 12%. So $718 was the difference between the amount of the wages and your table amount, the amount of the adjusted wage that it exceeds. So again, the amount that we are paid is $1,575. So we're looking at this third part here, this third row. We're scrolling over. We're going to back out $857 from $1,575. That will leave you with $718. We're going to multiply that by 12%. And we're going to get the figure $86.16. Now, that's not all of the federal taxes, because they had already calculated an amount of $38 for you. We're going to have to add the $38 and the 12% of $718 together to get the total combined taxes of $124.16. So listen closely to me. I don't have an Excel spreadsheet for you on this. You're just going to have to learn how to do it. So listen closely. What I did is I found the salary amount for this employee, which was given at $1,575. $1,575 was the given amount of salary. We have to find where that falls in between the columns A and B. The amount will fall in between $857 and $2,020. So we're using this line here. The tentative amount to withhold is $38. We're going to come back to that in just a second. What you have to do is find the difference between the amount that the adjusted wage exceeds, $857. You're going to subtract that from your weekly amount of wages. The weekly earnings were $1,575. So $1,575 minus $857 will give you $718 that we multiply by 12%. When we do that, that will give us $86.16. Then we add the $86.16 to the $38 that they had already figured up for us, and that gives us total taxes of $124.16. And I would check my work just to make sure you got the right amount there. So let's do another one. Write this information down. I can't stress that to you enough. You're going to write this information down. The second employee, Aiken, the marital status is single. So write down that the employee is single. Write down that the gross wage or salary is $1,200. The amount of the gross wages is $1,200. Write it down. Write down that they are biweekly. This employee is biweekly. That's important. Remember, we're going to go to the percentage tables and we're going to look for the biweekly amount. So I'm going back to my percentage tables. I'm going to close out the previous one. I'm on my percentage tables. I'm going to look for the biweekly amount for the second employee. So I'm going to go down here to my biweekly pay period. The next thing I need to know is I need to know whether that person was married filing jointly, whether they were single or married filing separately, or whether they were head of household. And this second employee, he was single. So we're going to go to our single table this time. We're going to look for our wages to see whether it falls in between this amount or this amount. the amount of the wages were given at $1,200. So that falls in between these two right here. Again, I can't see them, so I'm going to make it larger. And I guess I have to go here. And I'm going to scroll down to where I get to the biweekly. Right here's your biweekly table. I'm going to look for the amount of that falls in between $1,200. So my salary was $1,200. It's in between 17, 13, and this amount. Oops, I'm on the wrong table, aren't I? Look, I'm on the married filing jointly. So I need to go to my single table, look up the amount of the wages, which is $1,200. It falls between $857 and $2,020. So I'm on, this is going to be the amount of tentative tax. I'm going to skip and go on over to 12% is my tax percentage category that this employee is in. I'm going to take 857 from my salary amount. So my salary amount was 1,200. I'm going to subtract 857 from that. So salary 1,200 minus 857 gives you $343 that's going to be taxable at this 12% rate. So we're going to multiply 343 times 12%. And that's going to give you $41.16. And then I've got to remember to add back to that the tentative tax. The tentative tax was $38. So $41.16 plus 38 gives you a total tax for this employee for federal income taxes at $79.16. So I'm going to go back to Cengage and I'm going to put in $79.16. I'm going to check my work. I'm going to move to my third employee. I'm going to write down information about the third employee. The third employee is Larry, and Larry is married filing jointly. That's important to write down for Larry. He's married filing jointly. Also, I want to write down his pay, which was $1,090. Notice the pay period is semi-monthly. Write that down so that you'll have all this information for you when you go to your percentage tables. So I'm going to go to my tables again. I'm going to go to my percentage tables. I'm going to look for semi-monthly table. That's bi-weekly. Here's your semi-monthly table. I'm going to enlarge it so I can see what I'm doing. I'm going to look for the amount of the wages. The wages this time was $1,090. That falls in between these two amounts here. Notice the tentative amount that employee owes is $0. And then they're going to be taxed at a rate of 10% on anything that is above 1,033. So I'm going to subtract 1,033 from my salary. The salary was 1,090. I'm going to back out the 1,033 from that. That gives me $57 that is taxable at the 10% rate. So I'll multiply 57 times 10%, and that will give me $5.70. Since there was no tentative tax, it's zero, the only amount that this employee owes in federal taxes is $5.70. So I'm going to go back to Cengage. I'm going to write in $5.70. Check your work just to make sure that you didn't get off on the wrong line or something, or on the wrong table. And then I'm going to go to my last employee for this problem, which is Wolf. And Wolf is married filing jointly. So we're going to use married filing jointly. Write it down. Write down his amount of wages, which was $8,120. Notice he's paid monthly. Write that down, how he's paid. We're going to go to our tables. I'm going to look for my monthly percentage table. This is my monthly table. I can't see it, so I want to enlarge it. So let me scroll back up to where I can see a plus sign. And then we're going to scroll back down till we can see the monthly percentage table here. This person was married, filing jointly, so we want to go to this table. The amount of wages that they're paid monthly is going to be $8,120. So I'm going to go to the category that's between $3,713 and $8,754. It falls in between the salary of $8,120 falls in between these amounts. So we're on the third line or third row here. I'm going to scroll over. This is the tentative tax. Hold on just a minute. We're going to add that back in just a minute. I'm going to scroll over. He's in a 12% tax bracket. And the amount that I'm going to subtract from his wages is $3,713. So $3,713 is going to be deducted from his salary of $8,120. We're going to subtract $3,713 from that. That's going to give us $4,407 that we're going to multiply by the tax rate of 12%. So I'm going to multiply this by 12. And that's going to give me $528.84. Then I've got to add back what the tentative amount was that they'd taken from that, which was $164.60. So I'm going to add that to 528.84 plus 164.60 gives you a total tax of $693.44. So I'm going to go back to Cengage and I'm going to put in $693.44. I'm going to check my work. And that's all we have to do for this problem. Again, what we've learned today is how to calculate federal income taxes using the percentage table and also using the wage bracket method that we did for number one. And that's all I want to talk to you about today. So we'll stop sharing this with you now, and we'll see you next time. Bye bye.